Hi, I'm Keith McCullough. Welcome back. Just got back from vacation, so I'm back in the saddle, and I'm getting a lot of questions from our institutional subscribers on why the U.S. stock market has got whacked in the last couple days. I think there are three main reasons why from a sentiment perspective, which I outlined in this morning's early look, so I'll just knock those down one by one. Now, what I like to look at is sentiment from a futures and options positioning perspective. What I mean by that is I like to do the opposite of what the crowd's doing. So the first thing, or the first main reason why stocks are going down today are because bonds are going up. Now, if you look at what the street did on a very newsy day on Thursday, again, jobs were great and the economy was back, whatever. At the end of the day, what ended up happening was people went back to what they've been doing throughout the year, which is selling bonds and buying growth stocks, which has been precisely the wrong thing to do. So you can see this in the 10-year Treasury position. It's a net short position. So again, that went up on the news. Hedge funds shorted the bond market on the news when you should have been buying bonds on the pullback. So that's reason number one, big asset allocation shift into anything slow growth bonds, any equity that looks like a bond, we still like that. Now the second point is that stocks are going down because stocks are going down. Okay, don't forget that the S&P 500 hasn't had a 1% down move in over 55 trading days. Now again, at precisely the wrong time on Thursday, again, the news was good, allegedly. Hedge funds covered their shorts. They covered their shorts. So you can see this at the end of the day. The net short position got reduced by over 39,000 contracts. And again, this is down stiffly from I think it was the biggest net short position of the year in the S&P index and E-minis of over 115,000 net short contracts only 3 weeks ago. So again, hedge funds bought the equity news. Not good, not good. Finally, the U.S. dollar went up again. So people are like, "Oh, this is great news. The economy's back. I'm going to buy the dollar. I'm going to sell bonds. I'm going to buy Facebook and Twitter." Yeah, the same mistake they made in March of this year, which is a very bad mistake, by the way. And again, you can see the U.S. dollar hit its highest net long position of 2014 at precisely the point that you should have shorted the U.S. dollar. So again, it is what it is, folks. You look at the net position, understand where the other players are so that you could position yourself on the other side. Contrarian investing from a macro perspective this year has been nothing short of fantastic. In fact, that's why I was actually allowed to have a vacation for once, which happens infrequently. So if you have any questions about that, please ping me. I'm at Keith McCullough. That's my Twitter handle.